Welcome to the AACFB's 2023 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I will be your host. Our presenters today are Nicole Miller, Rebecca Massarini Cooper, and George Pilos with NewLane Finance. NewLane Finance is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I turn it over to the NewLane team, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to view it at a later date, it will be posted on the 2023 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I'd like to turn it over to Nicole, Rebecca, and George. This is all yours.
Thank you, Monica. And thank you to the AACFB for allowing us to present NewLane to the members. NewLane is very active in the organization, and we appreciate the opportunity to speak here and to attend your events. Hopefully those listening have had a chance to meet some of our reps at the events that we attend. But if not, we'll tell you a little bit about NewLane today and see if there's an opportunity for us to develop relationships with the additional brokers in the community. We're going to talk a high-level overview of NewLane, and then we'll save some time at the end for the Q&A. With me, as Monica mentioned, is Nicole Miller. She's a Senior Business Development Manager with NewLane. Rebecca Massarini Cooper is with us also. She's one of our dedicated credit analysts for the broker channel at NewLane. I know there's other NewLane sales reps that are either on or listening, and a complete list of them is at the back of the broker team on the back of the deck we'll hit later on. Next page, please, Nicole. So who is NewLane? What do we do? What are we all about? We were founded in 2017, really started originating in 2018. We're in Philadelphia. It was founded by me and my co-founder, Dan Dyer. Now, we have over 100 years of combined experience. That doesn't mean Dan and I have 50 plus years ourselves. When we created NewLane, we went back and found key leaders that we worked with in the past to bring onto the team that are experienced and steeped with knowledge in the sector, and brought them on to form NewLane. Dan and I had run a prior company that was a pretty significant in the industry for a period of time, from 1997 to when Dan and I retired in 2014. So we had a long history, long run with that prior company, and were asked to build NewLane by a bank in Philadelphia. So we've been building it since 2018 and have had some great success. The bank that's backing us is a bank called WSFS Bank. WSFS is a super regional bank in the area. It's about 23 billion in size, primarily focused in Philadelphia, Delaware, and New Jersey. We are nationwide. We're one of their only nationwide platforms, and they fully support and are fully committed to our growth and development. WSFS has committed to us to over $1 billion in size to get to. So we have a committed funding source here to support our growth. Dan and I grew our prior company to $1 billion. WSFS wants us to get it there twice as fast under their watch, this new company. So it's moving along pretty well. We've been in business originating for about 4.5 years. We're already number 79 in the Monitor 100, with our eyes on cracking the top 50 sometime soon. Nicole, you want to hit the next slide, please? So business lending done right. You see it a couple times on our slides here. It's really not just a tagline. It's something that we really try to dedicate and commit ourselves to. So what does it mean? When something's right, it's right. We try to make it right for the broker. We try to make it right for your broker's vendor. Try to make it right for the end user. Try to make it right for our employees, and try to make it right for NewLane's profit model. We try to run the business in a manner that the right decisions being made with a disciplined, consistent underwriting approach will allow us to continue to be committed to the sector. Trusted and dedicated team. You'll see at the back, we have 6 sales reps currently on the team, 2 dedicated credit analysts, plus others that jump in when we're busy, and 2 dedicated ops people to the broker channel. We are multifaceted at NewLane. We have a vendor channel, we have an end user channel, we have a broker channel, but the broker channel is completely walled off from the rest of our business, and we have dedicated resources working only on broker transactions. Speed and convenience, look, that's the ticket to admission in our business. Everybody has to be fast, we have to be convenient. We really push hard and strive to be the best we can be in that area. And I think that's something that we've been able to deliver, and I think our partners that we work with will pretty much say that we are consistently able to give them what they need when they need it. And fair and transparent funding, this was big for us getting back. This goes to business lending done right. There's lots of competitors out there that we know that have hidden fees, that have evergreen renewals, that don't have grace periods in their contracts. We have a 7-day stated late fee grace period. There's no evergreen renewal in our contracts. We have no hidden fees. What you see is what you get. We try to make sure that we provide fair and convenient financing to the broker community, to our vendors, to our end users, so businesses can acquire equipment they need to grow and develop over time. Next slide, please, Nicole.
Mhm.
We count our relationships, not transactions. So what does that mean? I tell the team I want us to develop deep relationships. I don't want to be 10 miles wide and a foot deep. I want to be, 10 feet wide and 1,000 feet deep. I want us to develop meaningful relationships where we're important to the source, whether it be a vendor on our direct side or the broker on our indirect side, and we can meet the needs that entity has in a financing partner. So we strive ourselves to try to grow and develop those relationships. That means you're going to get the attention here. I am available at all times to speak. My number's at the back. We create custom programs. We try to develop everything we can to make ourselves meaningful and relevant and important to our sources. And when we say fully committed, I underline that on purpose. I've been doing this for a while. 20 plus years, of in the business at our prior company in here. And we've never once had to pull back or pull out of the broker community under our prior company or here. We know there's cycles in the economy. We know there's ups and there's downs. And all too many times we hear people jumping in when times are good, but when they get a little bit of a sting of a little bit of a credit cycle or a little bit of a pricing cycle, they jump out. That's not what you're going to have at NewLane. We're committed to the sector. We are investing in the sector. I just added another sales rep recently to the sector, and we are, continually adding additional resources to the sector. We just had a record month for the broker team, October. Despite the economy, despite what we're going through, we're committed and we're still investing heavily in this channel. And we had our best month ever in volume for the past month. So we're here. Whether it be the Great Recession, which we managed through, our doors were open to the brokers at our old shop, or now through the economy we're going through. We're here, we're consistent, we're fully committed to the sector. The rest of it's pretty self-explanatory on that slide. Credit decisioning, turnaround time. Again, we know we have to deliver on the value prop that's out there, and we do our best every day to meet that needs of our clients. Also, I'm sorry, Nicole, before you flip, customized programs. We offer a plain vanilla for most, but if you have enough opportunity and volume to grow with us, we can offer customized programs that meet your needs. We try to accommodate the needs that are out there, but we want to make sure it's a meaningful relationship on both sides. Product offerings, it's pretty straightforward here. We'll broker, we'll discount, we'll buy portfolios. If you have portfolios you want to sell, you can call directly to me. My number's in the back. We offer financing in all 50 states. Let's talk about that for 1 second. We know some of the states have gotten a little more difficult to deal in. California, as an example, we have a bank parent, and we were able to originate all of our California deals directly under our WSFS Bank name. So that means that we're exempt from the disclosure requirements that have been put into place in California. All the other states so far have typically, on the disclosure requirements, have typically exempted bank subsidiaries, which we are, but California didn't exempt bank subsidiaries, but we found a way to underwrite directly through our bank. So for California deals, there is no disclosure requirement if we're working with NewLane. Some of the other bank sources may or may not have that, but we're trying to make it as easy as possible for us to deal with the various volume from the various states. Same for basic product offerings, the EFA, the dollar route, the assigned residuals. We can offer different payment options. App only up to 150 at the current time. Our sweet spot's in that 110 to 75. We'll do bigger deals, and we can do them, but I think our sweet spot of where we do best work is up to that 7,500K range there. We do DocuSign, and again, we can create custom programs for broker sources that have certain things they need us to dig into a little deeper. Probably no surprises here. Again, we're almost agnostic to the equipment types we deal with. We are a credit lender. We're not looking to realize certain valuations at the end of the term. We're full payout lessors. We're not taking big residual positions. So we'll deal with pretty much any equipment type out there with a few restrictions. There's restrictions that you'll typically see from from other sources out there. On the industries, same thing. We will look at the industries, and we'll determine, for the most part, we can underwrite most industries. We are data driven. We have a high level of data analytics that slice and dice the portfolio to see where delinquencies and losses and opportunities lower than expected delinquencies and losses exist. And we try to proactively adjust credit policies to make sure we're optimizing approvals where we need to be giving them and making sure we're tighter where the economy may be slipping a little bit. So that's the disciplined underwriting model I referenced earlier. We don't do owner-operators. We are not a huge player in the long-haul trucking. On the next slide, you'll see some of the programs we have from the mid to larger size fleet operators we can do, but we are not an owner-operator underwriter. Next slide, please. So again, no 100% financing. That's pretty basic in the sector out there. Something I do want to touch on is we do have a credit analyst review every decision. We have a very, very strong credit analyst team. We have years of understanding the market. Rebecca literally sits right outside my office here. We interact significantly as one of the lead underwriters for the broker channel. And I think that's important. We're still meeting turnaround times on credit in less than an hour on deals, sometimes less than 3 minutes when deals come through. But we have the analysts that try to find ways to get deals done. It doesn't go into a void of a decisioning model and spit out a yes or no. The team actually works to try to find out, is there a way that a deal can get done under the current credit appetite and the current credit environment? So I think that's a benefit that we're touching these deals and actually trying to find a way to make sure they get done. And as I said, we're looking to partner with brokers for programs. We want to have meaningful relationships. We want to have brokers that understand what we bring to the table, our consistency, our commitment to the industry, our expertise of Nicole and John and Matt and Rob and Keith and Walt, and our credit underwriting expertise from Rebecca and Brittany and our FCs, Madeline and Kevin. They're all committed to the sector and committed to the success of NewLane and the success of our broker partners. These are the program types. This is high level. In addition to the standard program, we offer many tiers of credit risk pricing. We put the pricing sheets out there that your rep or a rep on the back sheet can provide you more details. But this is high level stuff of some of the things we do. Look, let's not kid ourselves that we're not in a credit cycle and that we have to continually adjust credit to make sure we have the underwriting in place to align with the economy out there. But we don't turn a program off. We just adjust the margin, the credit required to participate in a program. We offer the medical program, an app-only program. We offer new business and a title vehicle program. We offer these programs consistently. The criteria box, as the economy shifts, may have to be moved up or down, but the programs themselves don't go away. If you want more details on these programs or other programs, you can reach out to any one of the reps at the end of the presentation, and they'll be happy to go through it with you. Well, what are we looking for? Typically 2+ years. We know there's newer broker that develop over time and have carryover experience from other broker shops they might have been at. We try to evaluate that. We try to make sure we're aligning ourselves, quite frankly, with good people, good sources. The second one to me is the most important. We're looking for people that do it right. We know that the industry sometimes has stigmas on it, on the very few actors that maybe don't always do it right. But business lending done right is looking for others that do it right and create that relationship with them. So brokers that share the core values that we have: integrity, passion, teamwork, and commitment to excellence. Those that share that will clearly be identified. You know it when you see it. And those are the people we will bend for. We will create programs for. We'll do special pricing opportunities for, if that exists. We're hoping that we can deliver what you need, and we're hoping we can align with the brokers that can fit that mold and be an ongoing partner and share our values going forward. We have an interest in obviously the mutual success of yourselves and of NewLane, and that mutual success will continue the ability for us to be a partner for you and for you to succeed in what you do in your business. To wrap it up, at least at this high level of overview, here's our contact information. Every one of the people on this team is more than capable of handling and developing the business relationships with you. And I'm active on it also. The team reports. This team reports directly to me. That's how important it is. It comes up to me as the president, and we meet frequently at least weekly to talk about issues that come up in the channel. Rebecca is the credit analyst that's represented on here, but we have other credit analysts, and Ron Queen, our vice president of credit, is also very close to this channel. So again, if you take anything from NewLane, you know, we're growing like a weed. We have fully committed funding from a large bank parent that wants us to be double the size we are, you know, sooner than later. We have long experience of managing through many risk cycles, you know, including the Great Recession. We have been committed to the sector from the beginning of time that I've been in the business, and we try to run the business under shared values of teamwork, passion, commitment to excellence, and teamwork. You know, business lending done right, again, you can't define it, but you kind of know it. We try to live it. We may not be perfect, but every day we try to live that, and hopefully that comes across in our interactions with our broker sources. I'll end it with that from the formal presentation part of it. I'll be happy to entertain any questions about NewLane, where we're going, what we're doing, specific questions about program opportunities. I got my team on board, but they might be better offline to work directly with a rep on what we can put together for you. Monica, can I turn it back to you at that point?
Yes. Thank you, George. Just as a reminder, if you have a question, please put it in the Q&A box and we'll get that answered for you. First question is, what does a completely separate broker channel mean? Tell us more. You never pulled out of the broker community. Thank you. So
yeah, again, that second one, we will never pull out of the broker community. We will be here in some capacity. So I have a completely separate team. They do not interact whatsoever. Rebecca on the team here only underwrites broker. The entire broker team only underwrites broker. The systems have a wall. We built a wall internally between the direct channel and the indirect channel. Nobody can see through the wall, peek over. Nobody on the direct channel can see over anything on the broker channel. If a direct person is just in general solicitation coming across a vendor, they can pursue that, but there's nothing that can be seen across our systems or otherwise from one side to the other, completely walled off. And they all know that if anybody is ever caught trying to end run the wall, I'll be the one to walk them out the door. It's known in the organization that to compete and to exist in this sector, you have to have that integrity. You have to have that commitment that you are not going to be taking advantage of any information you have, and we have that built up. If something comes in through a channel, that we don't know how it came here, it goes right back to the broker. We don't solicit end users. Our end users that we solicit are not broker end users we solicit. So we have 27,000 end users already, but only 18,000 are solicitable because the other 9,000 came from the broker channel, and we do not solicit them at all. So we have all the stuff built in place and systems protections to know that this channel lives, exists, breathes, and thrives separately than the rest of our organization. Hopefully that gives you a sense on that.
Can we set up vendors directly with you? Is it possible that we can get vendors with their own landing page so that they can submit deals?
Nicole, do you know from the marketing standpoint what capabilities exist on that?
Yeah, we're not doing that quite yet. It is something where we can set up the marketing from an underwriting standpoint. We can work with the marketing team, but we don't have a portal yet. We have you guys submit it directly to us through email currently. And the reason we do that is so that we can preview every deal, make sure that we're getting the right information and credit's not underwriting a deal that maybe isn't a fit, or maybe it is a fit and we're not getting the right information up front from the customer. So it gives you the best branding and knowledge of your customer and making sure we're getting every deal approved that we can.
I think to add to that, if I can, thank you, Nicole. We're 3.5, 4 years of originations, and the first year or two was really just a few of us sitting around trying to crack it. So we've been growing very rapidly on the front end. We're continually investing in enhanced technology. So there'll be more portal opportunities coming along. There'll be more of that technology, the landing page, et cetera. We have a marketing team that works across all of our channels that can provide that support. So more to come. We're growing like a weed and trying to keep up with ourselves on the various additional add-ons we can do as an organization, but more to come on that side to make the interactions, I think, easier, or I guess more technologically sophisticated going forward.
Okay. We noticed that you referred to Advantage credit score versus FICO. We run FICO scores. So how do you compare? How do those two compare?
Rebecca, do you want to talk about that?
Sure. So Advantage score is very similar to a FICO score. It can range differently, about 20 points or so. There's no set amount really that it can differ, but they're very similar. A VantageScore does take heavier into effect the availability on the credit and the increase. But as far as underwriting the credit, I've underwritten both a Vantage and a FICO. They're very similar reports. And we do use Experian, so that way we do soft pools on all of our personal credits.
Yeah, we have the metrics from 20-something years of just the gray matter. We know how the different scores should align with each other. So we're not going to penalize or benefit one score over the other. We know what a Vantage ought to look like in the range. We know what a FICO ought to look like in the range. We can make that transition over and make sure the right credits are getting done.
Do you protect the broker if a vendor contacts you directly? So if it's a vendor that was referred to you by a broker and they come to you directly,
Yes.
What's your protocol?
Yes. So if that vendor relationship came to us through the broker and they contact us saying, I came to you through the broker, I want to deal with you directly, it goes back to the broker. It goes back to the broker. That's a scenario where we do not look to and run that. Now we have the direct teams out there generally soliciting stuff, and they may come across broker relationships that overlap. We have very little overlap in our organization whatsoever. This has not been an issue in here. And when it does pop up as a potential issue, it comes to me and we resolve it immediately. It's that important, and we understand it's that important, and we understand we need to protect that that business. That's how the broker channel eats, and we got to make sure we protect it.
Like to hear that. What are the broker commission ranges?
Nicole, do you want to?
Yeah, so they're going to range between 8 and 15 points, depending on the dollar amount and the tier and credit that's being offered. So anything over 50 is typically 15 points max. If you're a discounter, you can always add your first and last before assigning it over to us. But that's typically our max range. If there's something different that you're needing, depending on what it is, we would just have to look into it. Nothing is off the table if it makes sense for you and for us as a business decision. So once again, it comes down to that custom program.
Thank you, Nicole.
Mm-hmm.
Do you guys have any vendor trainings or marketing material that we can provide for our vendors?
Yeah, actually, we should. That's a question that I do not know the specific answer. We have lots of marketing material out there. We have a ton that across our company we use. Nicole, have you worked with Molly, with a team, on developing that kind of material?
Not with Molly and Harry. We did do it previously before 2020 and a little bit afterwards. So it is an option out there. I would say that would be for your major programs that we're typically looking to do it. It wouldn't be a onesie, twosie, or full email blast as of yet. It's something that was kind of planned over the next 2 years, George, to develop further.
We have internal marketing capabilities, HubSpot and otherwise. So with the right partner, we can direct out materials to customers you want us to, because our machines allows us to do that pretty easily under your name or co-branded or otherwise. So there's lots of opportunity for the right program structure. Raise it up with your rep, and we can explore it with our marketing team. We have committed marketing resources, also a content writer, as well as a marketing technician that helps us determine how to deploy our messaging through the systems.
Okay. What industries would you consider your sweet spot?
I'd like to say all those that are doing well. Now, we're as you see from our list, we can slice and dice the portfolio, but we're across food services, we're across C&I, we're across, you name the sector we're in. We have medical. We don't have a focus. Even on our direct side, we are not a focused lender yet. We do not have 2 or 3 that we go after. I have a big medical group on the direct side that we kind of inherited with the beneficial acquisition, and they're a wonderful group that deals on that side, veterinary medical. But for the most part, we underwrite to the sector. We track the sectors. There's a few caution industries out there, long haul trucking, et cetera, that we have to be a little tighter on. But I think we do most industries pretty well, and when we do have to tighten on a sector, I think we're pretty good through our.
We're the presenter.
Nicole, do you want to add to that? I don't know.
Yeah, you're going to have your standard collateralized pieces, right? So your yellow irons, things like that we like really well, even though we're not a collateralized lender. Obviously, those are going to score easier than something like software. But other than that, if it makes sense, we're going to do it. So just doesn't float, fly, go underground, and we'll make it happen.
Great. Do you guys use KPIs to track broker deals, and how can we shine as brokers for you? So even if we don't close a deal, we can keep a great relationship with you.
That's a great question, because it is a two-way street, and it's got to work for both sides. So we look at KPIs, until you can imagine. I got reports on every broker that we deal with. I show app volume by month. I show unit volume, dollar volume. I show the approval rate by each broker. I show the booking rate by each broker. I show where the yield has been trending to us on that front. So we do look at that. We try to have relationships that are efficient. If you think about it, if I have a 20% approval rate, I'm paying somebody out there to do 80 apps that they're declining. And it doesn't mean that you're sending us bad stuff. Maybe it's just not a fit with the business you're generating. So low approval rates, low booking rates are an inefficient, model for us. And it's not something that works. So trying to find what we can do right for you and make sure we can approve that business for you, and that business books with us makes the relationship efficient, which allows us to pass that efficiency on, in some cases, in lower pricing out there. But if I got an inefficient relationship where I got a 20% approval rate and 20% booking rate, think about that. 20% book of that means 20 apps out of 100 were approved, and 20% of those, or what is that, 4 apps. So if I'm doing deals where I got 4 apps booking out of 100 apps, that's not efficient. And that's when we have to have a discussion to see, are we the right partner, or do we need to be doing something different to generate a stronger relationship? So efficiency of relationships important, and consistency of flow. If we can know that we're going to get a certain amount from you, then we can start creating some of these custom programs and support, and maybe even the co-marketing that you might need.
Great. I am not seeing any more questions. Give it just a second in case anybody else pops up. All right. Well, with that, we will wrap it up. I want to say a big thanks to all our participants, and especially our valued funding source member and gold sponsor, NewLane Finance. Thanks for a great job, everyone. We invite everyone to meet with NewLane Finance in person at the 2024 AACFB Annual Conference coming up next April in Phoenix, Arizona. Thanks again, and have a great day.
Thank you all.